Well, joining us now to share his commentary on the day's market performance is Jandre Pieterse from Umthombo Wealth. Jandre, hi, good to chat to you. Big things happening in the United States. Of course, waking up this morning to this video from Jerome Powell scathing against Donald Trump. You can only imagine what's that's doing for markets.
Hi, Ray, and thanks for having me on the show. Yes, no, that has been quite a shocker for the markets. But I'd say, broadly speaking, it's a continuation of a trend we've seen over the last year where there's been continued pressure on the US central bank, on the Fed. And that's certainly the way Jerome Powell's seeing this as well, as extra pressure for him to be cutting rates further. And I think all of this calls into question just the independence of the central bank. I think the main impact you're seeing today in the JSE is just how much this is driving up precious metal prices, gold prices, platinum prices. And I think the big driver there is, you've seen two drivers of the precious metals rally, especially in gold, being central banks de-dollarizing, but you've also seen, they call it debasement trade, where there's further loss of confidence in fiat currencies, worries about runaway inflation and cutting rates at the same time. And I think this is just adding fuel to that fire. And ultimately, we're seeing gold making new highs. We're seeing platinum up also north of 3% today, and naturally benefiting our mining shares.
Yeah, you could actually see that the all share really up high because Harmony, Sibanye, the whole list goes on and goes on. Gold is up. I suppose that was to be expected. Something else that's making news headlines is Glencore and Rio Tinto. Now, if they get their agreement together, I think they've got until the beginning of Feb. If they get that together, that's going to be quite something. What's the latest there?
Yes, this could be a monumental deal in the mining space. It looks quite promising at this stage. We know that back in 2024, they had initial discussions and those ultimately fell through. And at the time, the board of Rio ultimately pushed out the CEO. And one of the reasons seems to have been his unwillingness to do large-scale M&A, in particular with Glencore, which they were in talks with. So this time around, it seems very promising. Both parties have, from Glencore's side, acknowledged that there are early talks and this could end up in a merger with Rio acquiring Glencore. Our base case is that a deal does happen. We think all the makings are there. Ultimately, this is all about getting more copper exposure. Glencore has a lot of it. In their December capital markets day, they were dressing themselves up for sale, just highlighting that potential copper growth to double their copper portfolio over the next decade. And if you look at what other miners have been paying, the likes of BHP acquiring Philo Corp for $3 billion last year, that business could be worth quite a lot. And equity stock markets don't necessarily pay for things that are not generating earnings yet, but miners take a 10-year view. So we think that could justify a large premium here. And ultimately, they don't easily walk away from M&A once something is in their sights, and the board's given a mandate here.
Interesting you say that they don't easily walk away. Well, let's hope they don't, because it would be great to see the story come to an end. I did notice, though, that Rio Tinto's shares were down for a while, Glencore's up, but I suppose that was to be expected.
Yes. Given that the natural structure of the deal is hinted at being Rio acquiring Glencore, that probably involves a premium. Typically, these things range from 20 to 30%, could be more, and hence that would be a negative impact on Rio shares once off. Rio's market cap is roughly twice that of Glencore, so we think they could stomach a premium, and they are trying to structurally move away from less iron ore exposure to more copper. We think also, ultimately, this could be a win-win for both, but especially for Glencore. So they come together, they could combine the businesses and then do a demerger, put together the copper and base metals that trade at a much higher premium multiples, put together Glencore's coal, Rio's iron ore, and put that together in a free cash flow dividend-paying vehicle and have a win-win for investors.
That is so interesting. Right, let's go back to what's happening in the world. We spoke about Donald Trump. Now, gold, of course, shooting the lights out again. Why? Because it's a safe haven. And like you said, the gold miners are really happy. Jandre, where do you see this going? Because it's, the gold just seems to be going up and up and up.
Yes, yeah, it's certainly been a one-way trade so far. I think a lot of it boils down to the US dollar at the end as well. Very high negative correlation there, dollar weakening, gold and precious metals strengthening. And that's why that's still been the one-way trade. I think it's hard to foresee an environment, at least in the first half of this year, where the gold trade doesn't keep on working. But we do think ultimately we are going to start seeing other precious metals leading. We've seen a rotation into silver outperforming gold, and I think we're in the early days of seeing platinum and PGMs outperforming gold. And I think that's because You've had the central bank leg of the trade, but you've also had the investor fuel part of the leg. And I think investors are starting to take profits there and reallocate those into areas that have lagged, such as silver and platinum. And you've got a lot of fundamental support there. You've got weak supply after a decade of underinvestment in platinum. You've got supply disruption beginning of last year. You've got now the ban on internal combustion engines in the EU being cancelled, which was planned for 2035. And then I think a big piece of this rally has been, as of December last year, in China, you had the GFEX exchange allowing platinum and palladium future trading. We've seen massive volumes flowing in there, now matching even that of the COMEX in the US. So I think just that level of investor buying, tight fundamentals is the perfect backdrop for platinum and PGMs to outperform gold and further benefit our indices.
Yeah. Okay, that's gold. Now there's oil. And as you know, we got Venezuela. US President Donald Trump declaring himself the acting president of Venezuela. That came also through overnight on X and other channels as well. Where do you see oil going? Because at the moment it's a very cautious market.
Yes, indeed, Ray. I think sentiment has been very negative in the oil space, and certainly fundamentals over the last year have not been favorable there. Large oversupply, particularly coming from the likes of OPEC, and demand being quite tepid. I think if you take a medium-term view, sentiment is overblown. I think added supply from the likes of Venezuela will take multiple years to be achieved, needing large amounts of capex to be invested, and will take time. I think given this backdrop of very bearish sentiment from investors, as well as the heightened risk of supply disruption, you could have disruption out of Venezuela, you could have disruption out of Iran or Russia, given what the US is doing politically at the moment. Any one of those could ignite a powder keg effectively.
Yeah.
So I think if you take a 12 to 18 month view, ultimately, I think in the early days of a commodity super cycle, coming still out of a weak demand backdrop, as you have global manufacturing recovering post the trade war, I think most commodities are going to be up higher. Oil's coming out of a pretty depressed base. It's not a preferred pick at the moment, given the weak supply space, but I do think you'll see upside there.
Yeah. Jandre, it's so interesting because we're in uncharted territory at the moment. And I think one of the biggest things has been, where do you put your money? Where do you invest? What is your stock pick at the moment? What are you looking at the moment? Because it's, we're just coming into January and we need to kind of get a bit of a bearing.
Yes, my stock pick for today is the Sibanye-Stillwater. It is a PGM and gold miner combined. It has been quite a strong performer year to date, been one of our top overweights over the last few months. And I'd say this is one to buy on any kind of weakness if you don't hold it already. We are very bullish on platinum and PGMs, as I've already mentioned, and we're also constructive on gold, and they produce both. It has become very cheap. Typically, it trades on a PE multiple in line with the likes of Implats. Currently, Implats is trading at an 80% higher multiple. So if earnings are just matched, you could have a re-rate here to the order of magnitude of 80%. But we also think that earnings growth is going to be very strong out of the likes of Sibanye. You've got operating leverage, is given that they are a high-cost producer, which means that when prices go up, the earnings tend to grow faster than peers. They've got financial leverage, given that they've got some of the highest net debt in this space. And given this buoyant price backdrop, they are de-gearing rapidly, and that will drive further earnings growth. I think on a sum of the parts basis, if you apply the multiples of peers, you are only paying for the PGM business. You're getting the gold business for free, you're getting the lithium project for free, and other businesses as well. You've got now production recovery in the gold business. You've got a new CEO, and we think we could see some more M&A discipline there, which could lead to a re-rate. And ultimately, you've also got an overlooked growing lithium business in there. CapEx coming to an end very soon, production starting soon as well, and the lithium price has also been rallying. So we think there's a lot of optionality and reasons to be excited there. Share price is up 5-6% today already, but I think medium term there's still a lot to play for.
Yeah, you can't lose at the moment, specifically, like you say, with what's happening with the gold price. Jandre, thank you so much. Good to chat to you on Business Lunch. Thank you for joining us. That was Jandre Pieterse from Umthombo Wealth.